Rob Fay is off today. I'm Bruce Claggett in for Rob. Can we all exhale now? And I'm saying this in light of news this week that finally, after months and months and months of waiting for this, Canadian interest rates, at least as set by the Bank of Canada, the prime rate, have dropped. Not by a lot, but they have dropped. And are we now in a new era of rising interest rates being over and even more substantial relief just on the horizon? When you go from 5.00 down to 4.75, is that the break we all need? Or is it the trend we're looking forward to that is more important? Or is there actually going to be a trend? We're all kind of assuming that this is at least the end of it holding at 5.00. And what about mortgages? I mean, that's the big question. The impact on the real estate market right here in the Vancouver Lower Mainland area. All these are really notable questions and ones that can be addressed by the likes of Corbin Chivers, a realtor at Stonehouse Realty. Corbin, thanks so much for joining us this morning.
Good morning, Bruce. How are you?
I'm doing okay. Is your phone now ringing off the hook, as they say? No, what's the impact? Let's get real. 5 down to 4.75. What does this mean for you and the Vancouver home buyer market?
Right. Well, thanks. We did see that 0.25% decrease, which was definitely nice to see. However, I mean, this is going from at the beginning of the year when the market was expecting 4 to 6 price cuts or interest rate cuts. And now the market's projecting, the 2 cuts. We had 1 cut just last week. And as you said, it's a small cut. So what's happening is we're seeing that not only that rate cut, we have a lot of buyers on the fence who were waiting to see what the market was going to do, that are thinking about coming back in. But we also have more than that in terms of sellers that were waiting to sell their properties, who were thinking now might be a better time. So that's sort of the back and forth that we're seeing between buyers and sellers right now.
Now being the better time, I also think that when we come into late June, going into the summer, that usually is, interest rates aside, a bit of a peak, isn't it?
Yeah, we do see more volume of business during this time typically. But if you look, this is actually one of the very first Mays in the last 19 years where sales actually went or it stayed the same from April to May. There wasn't a big increase. But what we did see a giant spike of inventory this past month. And that giant spike of inventory this past month has led to the sales ratios decreasing quite dramatically in different areas.
You mentioned inventory, and we've heard it time and time again. Vancouver, in terms of homes, has an inventory shortage. But when we start talking about the decrease, what we're talking about may be only applicable to those who are first-time home buyers or new into the game, I guess. 4.75. What does that actually mean for any first-time home buyers, or is there even such a thing anymore?
Great question. So in terms of the actual math on what that's going to do to somebody's mortgage, it's not a lot. But in terms of what we're finding is that there is a bit of a change in buyer sentiment. So for that first-time home buyer that you're mentioning, we've got a lot of first-time home buyers that were sort of waiting for this as an influx point maybe, or a time to consider getting in the market. So what does it mean? I would tell a first-time home buyer that it's the first cut we've had after we had 10 increases. It's the first time we've actually had the 0.25% decrease, with another potential decrease coming this year. So if you're a first-time home buyer, I think you look at that and you say, well, this is hopefully the start of many more decreases, but that much is uncertain.
We know that many people overextended themselves, and be it right, be it wrong, be it the best direction or not. Reality is that they're into it and into it deep, and they're feeling the pain. And that pain is in terms of a really big mortgage, one that they cannot afford. And when that comes into being a reality, and some of that is just coming to light now after people have really leaned into any equity in their homes and are now feeling the pinch, are they inclined to, and are you seeing people simply giving up and getting out of their homes and downscaling or going into being a renter?
That's a great question. I'll answer the last part first. So, are there people that are in tough spots who are, maybe refinance at the top of the market or purchase at the top of the market, who are moving into a renting position? The answer is yes. There are a lot of folks that are trying to cash out of their properties, and the thought about taking on another mortgage at today's interest rates, it's just too much for them. So we do have a lot of clients that are actually selling, cashing out, and sort of waiting to see what's going to happen.
You see that the mortgage rates are now dropping. At the same time, we've had government intervention in the housing market in a bigger way than we've seen in years in the past. Are those two coming together to mean anything that you can actually figure out, or is it still a head scratcher?
I'd say things are very uncertain. Right now, you've got a lot of speculation going on, and you've got with the interest rate decrease, normally speaking, you would imagine that to increase prices, and as rates go down, prices do increase. But because of this ginormous buildup of a lot of people not listing their property during this last year, what you've got now is you've got a lot of people waiting to sell. So back to your, is the government? Sorry, your question was about the government intervention. Sorry, or
Yeah, and coming together juxtaposed on the other.
right. So, I mean, you've got a whole host of different things, different bills being passed and different things happening. But I mean, in terms of the intervention and of building more homes to make homes more affordable, if you're getting at that, I think that's just a political thing. They're not going to be likely building the amount of homes that the federal government has promised that they will be building in this future, and I don't think that's going to be anywhere close to that number. So I don't think that's going to be the intervention that's going to all of a sudden make homes more affordable.
Just an observation and looking around my own neighborhood. In fact, right across the street from me, there was a for sale sign on a townhouse right in Cloverdale that was there for a couple months. It's the first time in 15 years that a place had not sold in a couple of months. Is that about to change?
Well, what we're seeing right now actually is it's one of the quietest Mays May's coming into June that we've ever seen. So I actually live in Cloverdale, where you're mentioning, and it's when it comes to townhomes, we just had a giant spike in inventory in Clayton Heights and Cloverdale, and pretty much everywhere. So I think we're going to likely see a continuation of longer days on market and higher inventory, despite this small 0.25% rate cut.
Corbin, we're going to keep you around for a little bit. Is that cool?
Absolutely, man. That sounds great.
Sweet. Thanks, man. Appreciate it. That was fantastic.
Oh, thanks a lot, buddy. I appreciate that. Thanks a lot.
Yeah, of course. You're natural.
Oh, man, you're too kind.
Hang tight here. So commercial break's about 3.5 minutes or so, okay?
Okay, sounds good, buddy. I'll be here.
Sounds good.
Okay. Ciao.
We're talking about mortgage rates in light of the drop in the Bank of Canada prime rate, 5.00 to 4.75. Not a big drop, but a drop nonetheless, and certainly an indication that the era of holding at 5 or going up appears, despite inflation, appears to be over. And in light of that, we're talking with Corbin Chivers, a realtor at Stonehouse Realty in my neighborhood in the Cloverdale, Clayton Heights area. And we're talking about what this means for those with mortgages. Are they able to still afford their mortgages? And those looking to get into the market. Corbin, thanks so much for staying with us right through the break. Corbin, people that come in and see you in your office, if they are trying to get into the market, maybe they've come out from the Vancouver area itself and moved east and are thinking about buying a home for the first time, has their mood or has their way of looking at things changed at all with the past higher interest rates?
Yes, I think absolutely. I think you've seen a lot of people decide not to move actually because of the higher interest rates, and people who are in fixed term mortgages in their homes, say if they were moving from Vancouver out this way, a lot of those folks don't want to sell and have to take on the higher interest rates. So Yeah, we've had a lot of people move out this way, and I think that's going to continue just because homes are a lot more affordable here in the Fraser Valley than they are in Vancouver. So, yeah, I think the interest rate cut is definitely going to change, a little bit of the buyer sentiment. And I think people who are buying, if they're first-time home buyers, I think this is a sign that, the worst is hopefully over.
Those who want to move up, possibly from a townhouse to a house, and have always looked to or thought about a mortgage helper. Maybe it's that laneway house in the back of the house or something down in the basement. Maybe a little bit more worried, I would imagine, with maybe changes in policies when it comes to renters. What are you hearing about that? Is there any concern there?
Yeah, actually, Bruce, a lot of concern there. And ironically, you're speaking to me as I just listed my own rental property. That's a 2-story basement suite and coach house. So that hit the market actually on Friday. And to answer your point about, with the suites and how that's being affected, I think homes like with basement suites and carriage homes or laneway homes, I think those have always proven to be a great home for families that are looking for that extra rental income to supplement their mortgage and help them out with the prices being as high as they are here. And I think that if someone is looking to make that move at all right now from a townhome into a detached home, I think one of the very first things I would ask that client now is to consider is, do they want a mortgage helper, and is that something that we can possibly get? Because there's very few ways to generate that sort of income from your home. And I mean, during this past market where interest rates went up to where they're at, just to share, the type of rents that these homes would get versus what the expenses are, including the mortgage, it's actually quite negative cash flow for that owner. So that's one of the reasons why I'm selling that property that I have right now. So, if you're moving out anywhere, I think if you can have rental income from your home, that's going to be such a help if interest rates come back to where they're at today, or if they stay where they're at today.
I would imagine that the margins have always been quite thin in what you can afford with your mortgage with a helper and what you're actually taking in as opposed to what you're paying out. Has that changed a great deal? And does it change even with a 0.25% drop? What are you seeing as a reality in the market itself?
Well, this is one of the biggest shoes left to drop. So, I mean, the idea that now we've got the first interest rate cut and buyer sentiment's changing a little bit, and we've also got sellers who've been waiting to sell their rental properties. One of my biggest fears is that the inventory is going to start to increase substantially and maybe spike even higher than it is right now due to investors selling their discretionary rental properties. So I'll explain. If you put 20% down on any sort of property right now, so say it's a detached house or a townhome or a condo, and that property is either A, you're going to rent that property out and have tenants in that home. If you're doing that right now in today's interest rate environment, to go back to what is this 0.25% really change things for people, all these homes are still very negative cash flow. It's not uncommon to see a townhome or a condo being rented out for maybe $500 to $1,500 less than the expenses of owning that condo. So the fear is that we're going to have a lot of people with their discretionary rental properties start to flood the market with these rental homes that are negative cash flow today, and that is going to increase inventory and, definitely a counter effect to all the buyers that are coming out.
Corbin, you explained it so well and really good information, and I've learned a lot there. Thanks so much for lending your expertise on a Saturday when many people actually go out looking and shopping around. Thanks so much.
Absolute pleasure, Bruce. Thank you so much. Really appreciate it.
Okay, that's Corbin Chivers, realtor. Perfect. Exactly what we wanted, man.
Hey, buddy. Oh, thanks. How did I sound? I was a little nervous for a couple.
Couldn't even tell. Had no idea, honestly.
Oh, buddy, okay, great. Because I was like, a couple things I said, I was like, oh shit, was that the actual question? Well, hey man, that was absolutely wonderful, and dude, honored that you invited us, man. It's so cool.
Anytime. I'm gonna I'm gonna keep you in my short list for people I want to call anytime I need some real estate stuff.
Oh, buddy, that would just be wonderful, man. That was cool, man. That was a thrill. I've never been this fired up, excited at 8:26 in the morning before.
There's some things that coffee just can't accomplish. Radio interviews.
Yeah. Yeah, I think it's good to get that radio interview, and then I can tell the wife I'm a morning person now.